Hey, what's going on? Welcome back to the channel. In this video, we're going to be taking a look at Theta. I do want to say that I'm not a financial advisor. You should do your own research before investing money into crypto. If you haven't seen the previous update, make sure to watch that before watching this one. It's going to be linked in the top right hand corner of the screen. Now, let's jump straight into the TA. Taking a look at the daily chart, Theta is still in this massive channel down pattern, and as you can see, we are coming back down to this support block between 77.5 cents all the way down to 55 cents. So this is going to be our massive bottoming out area, and this is where we expect the price to bottom out eventually this bear market, in case this December 2022 low is not the bear market low, because as you've seen, or if you still haven't seen the Fed minutes report, they're expecting the recession to come into play sometime later this year. So that could mean bad news for the crypto market and for the S&P 500. And that means good news for us because we get to buy cheaper prices. So there's still a chance for us to even lose this low at 71 cents and come back lower. So I would say don't discount anything in crypto as of right now, because anything can happen. You have to be ready for both outcomes. As long as you're exposed to the markets and you have some money on the sidelines just in case we have a flash crash, you should be good to go. There is no need to worry as long as you're buying into fundamentally sound projects and not a bunch of shitcoins. So taking a look at the daily RSI, the daily EMAs that we have here. So the 20 EMA is the yellow line and the red line is the 55 EMA. Now, as you can see, we just had a bounce off the 20 EMA. We had a bounce off the 20 EMA in April. And once you're below the 20, you're essentially in a downtrend, and it keeps pushing you back down lower and lower until you have a bounce. Now, you've lost this March low here, which is quite negative. The last update that we had was back in on May 12th, I think, and we were sitting exactly at this support, looking for a potential double bottom pattern, and we started moving to the upside, but obviously Bitcoin didn't let us break through. So we invalidated the double bottom pattern because we lost this low, right? For a double bottom pattern, we need the second low to be either a bit higher or on the exact same level as the first low, which is not the case here. So what we could be expecting here is, if I remove all the Fibonacci retracements that we have over here and I take a fib from this local high in April to the local low in March, we can get our 1.618 targets. And let me extend this. There we go. So our 1.618 target would be around 72 cents, which is exactly our 2022 low in December. So that is, I don't think that's a coincidence. We may just come back down to retest this low, and that will be our bottom. However, if Bitcoin sees a major crash of about 10 to 15% in a day, we could have altcoins dipping 20 to 30% with these large wicks to the downside. So, if you want to set up some buy limit orders below the low here, below this low, just in case, around the second fib level here on the larger fib, around the 2.272, which is 62 cents, 56.5 cents. No one's going to blame you, because if we have that wick to the downside, you can get filled immediately. And as you all know, after these flash crashes, you do recover pretty quickly. So hopefully you are able to do that if you have some spare cash right now. And obviously choose your exchange wisely if you want to be doing that. Now, if we zoom out and look at the big picture here, so this Fibonacci is set up on the weekly chart. So let me just quickly switch over to the weekly just so we can get a better view. We have the potential bear market low in December, and we have our all-time high in March 2021. So we're going to be looking at $28.50 for the next bull market as our main target. That would put us at $28 billion, which could be, some could say this is a lot, but to be honest with you, at the bull market peak with a higher cap altcoin like Theta, I think this is possible. Just to be safe, you can start averaging out of the project once you get to $20 and just average all the way out until you get to 28.5, and you're out of your position by that point, and you can be waiting for the next 95% pullback, which is probably going to take us down here to around $2 maybe in 2026. We'll see. But taking a look at the daily RSI real quick just to see where we're at. And once again, we are in the green support block, which is between 34.8 and 27.08 on the index. And usually that is, historically, that has been a very good buying opportunity. So I might end up buying some Theta. If I do, obviously my patrons will get the trade alert immediately. So feel free to check out the Patreon linked down below in the description. You get 7 days of a free trial where you can get access to all of my content and see if you like my Patreon. Obviously, you can stick around if you do. Now let's switch over to the weekly chart. And before we continue with the video, I quickly want to mention the YouTube memberships. So if you want to get more exclusive content, you want to support the channel, and you like my content, feel free to check out the memberships. So there is one membership tier here on my channel, which is $6.99, and you'll get access to my exclusive podcast that I do every single week. And now we're starting to invite guests to be on the show as well. And we share low cap gems. We take a look at my portfolio, take a look at my buys. We take a look at the financial markets. We take a look at what's happening with the Fed. So there's a whole bunch of stuff in these podcast episodes, and that's definitely a good way for you to get more content, and it's a great exchange of value. So thank you all, and let's continue with the video. Taking a look at the weekly chart, now we do have a support level here between 78 cents all the way down to 60 cents. Now this is based off of this trading range that we have back in 2020. From September, you had a move to the downside. Into November, you bottomed out, then you had a massive move to the upside, and lo and behold, you're coming back down to retest that exact same area as support. So no one is saying that we can't have this retest multiple times before we eventually break out, but I do want to stress this out. I want to stay in this support block. If we start losing this green support block, we could start looking at prices like 35 cents, 20 cents, 25 cents. That is not going to be very good, in terms of a speedy recovery, because it will take longer to recover if we do end up dropping down to those prices, and that will obviously change and affect our bull market targets. So as long as we stay within this green support block, I think we should be good to go. And if we lose that, you can average in. Obviously, you can keep on buying if you drop below, if you're bullish on the project. But I'm just saying that you want to keep you want to have a healthy chart for a healthy move to the upside and a healthy bull market. So let's see how this plays out. Let's see what the Fed does with the interest rates on June 14th. That's going to be pretty interesting. It looks like they're not going to be going for the pause, but it does seem like they want to leave the window of possibility, or a window of possibility for a potential raise in the future, maybe in July, maybe in September or November. So they don't want to completely go for a pause and then go for the interest rate cuts in 2024. They could come back down to raising, or they could come back to raising the interest rates later in the year if they think that it's necessary. So that's pretty much it for this video. Thank you all for watching. Let me know if I missed out anything important on the charts, and I'm gonna see you in the next one. Take care and goodbye.